Hey, what's up everyone? Welcome back to the channel. If you've been watching the markets this week, you already know things have been a little wild. Tech got absolutely wrecked yesterday, oil is in free fall, and somehow, Wendy's is the talk of Wall Street today. Yeah, you heard that right, Wendy's? We're gonna get into all of it, so let's go. Alright, so let's start with the big picture. After a brutal Tuesday session, markets are bouncing back today. The S&P 500 is up about 0.6%, the Nasdaq gained 0.7%, and the Dow added roughly 370 points. So yeah, green across the board, and investors are breathing a little easier this morning. But here's the thing. This recovery is happening despite some serious headwinds still in play. Yesterday was rough, like really rough. The VanEck Semiconductor ETF, which tracks the biggest chip stocks, dropped a full 7% in a single day. That's not a dip, that's a crater. Stocks like Micron and SanDisk each fell around 13%. So why is today green? Well, part of it comes down to one word: oil. Oil is getting absolutely crushed right now. Brent Crude, that's the international benchmark, dropped 4% today to around $73 a barrel. And US West Texas Intermediate, it actually broke below $70 for the first time since March. We're talking levels we haven't seen since before the US and Israel launched airstrikes against Iran back in late February. Now, lower oil prices are kind of a mixed bag. On one hand, cheaper gas is great for consumers and great for companies that rely heavily on transportation and shipping. That's a positive for the broader economy. But on the other hand, energy stocks are getting smoked. Exxon, Chevron, ConocoPhillips, all down more than 2% today. SLB dropped over 3%. The entire energy sector ETF, the XLE, is down nearly 2%. So if you're holding energy stocks right now, it's been a tough week. The big question is this a temporary dip, or is oil entering a longer-term downtrend? Keep an eye on that. Okay, now let's talk about the biggest story of the evening, and honestly, it could move the entire market tomorrow morning. Micron Technology reports earnings after the bell today, and traders are locked in on this one. Here's the setup. Micron has had an absolutely insane run in 2026. The stock hit a brand new all-time high just on Monday, and as of Tuesday's close, it's sitting at over $1,051 per share. That is wild. Analysts are expecting earnings of $20.83 per share on revenue of $35.75 billion. Those are massive numbers. But here's where it gets interesting. Jay Woods, chief market strategist at Freedom Capital Markets, is actually warning that the stock could sell off even after a good earnings report. He's pointing to that $1,000 level as a key support zone. He says traders will be watching to see if it holds. That might sound like a small drop percentage-wise, but on a $1,000 stock, every move matters. Rick Gardner over at RGA Investments put it pretty well. He said the tech sell-off we saw Tuesday is actually a healthy pullback. That a lot of these names had gotten overstretched, and with earnings season kicking back off in July, the bar for these companies is really high. So this isn't necessarily panic, it might just be the market recalibrating. But we'll know a lot more after Micron drops those numbers tonight. Alright, now for the most unexpected story of the day, and honestly, maybe the week. Wendy's stock surged more than 40% at one point this morning. Trading was actually halted by the New York Stock Exchange because the volatility was so extreme. When it reopened, shares shot up to nearly $9. As of now, it's up around 30%. So what happened? Well, Wendy's announced a new CFO and Chief Strategy Officer, a guy named Steven Cirulis, who came over from Potbelly. And look, management changes matter, but a 40% surge over a CFO hire? That doesn't really add up on the fundamentals alone. This has retail investor energy written all over it. It looks like a classic case of social media hype driving a short squeeze or a momentum trade on a low-price stock. Is there a real business case here? Maybe. But if you're jumping in chasing that move right now, just be careful. These kinds of spikes can reverse just as fast as they happen. Two more quick stories before we wrap up. First, housing. New home sales data dropped today, and it was not pretty. Sales fell 7.3% in May, coming in at a seasonally adjusted rate of 580,000, well below the estimate of 632,000. Meanwhile, the average selling price for a new home jumped to $540,600. That's up 7.8% from April and 5% higher than a year ago. And mortgage rates are still hanging around 6.65% on a 30-year loan. So what does that tell us? Homes are getting more expensive, rates are still elevated, and fewer people are buying. That's a tough combo, and it's something the Fed is going to have to keep thinking about. On a brighter note, Amazon Prime Day delivered. Tuesday was the single biggest online shopping day of 2026 so far, with U.S. retailers pulling in $8.3 billion, up 5.3% year over year. Consumers are spending on electronics, appliances, and everyday essentials. And that number is actually beating Adobe's own projections for the 4-day event. So consumer spending, still alive and kicking. All right, guys, that's your full market breakdown for Wednesday, June 24th. Markets are green today, oil is sliding, Micron earnings could shake things up overnight, and Wendy's just reminded everyone that the stock market will never stop being entertaining. If you found this useful, drop a like, it genuinely helps the channel grow. Subscribe if you're new, because we break this stuff down every single day. And let me know in the comments, are you watching Micron tonight? Do you think this tech pullback is healthy, or does it worry you? I'll see you in the next one. Let's get it.